Good afternoon, everybody. Welcome to the 5th of July. It is your Tuesday edition of the TraderMerlin show. I hope you all had a fun, relaxing, freedom-filled weekend. It's kind of hard to do when you have an event like we did out in Chicago over the weekend, and thoughts go out to all those families and those poor kids that were enjoying a wonderful parade and were ruined by some complete idiot. Doesn't even deserve to be on this planet. But hopefully we can all work past those types of things. Anyway, let's get in tune with what's happening for today's show. Obviously, we've been talking about the U.S. dollar for quite some time on this program, and for me, it's important to look at the impacts of that. So today I'm going to spend a lot of time talking about specifically that, how to trade the soaring U.S. dollar. And I think when we look at this a little bit deeper, certainly there's trading and investing opportunities in this, but also for anybody here who is an American, this is a great thing for you as a consumer of international goods and services. So if you're ever planning a trip to travel, it looks like it's going to be a great time to start to buy, and not to buy, but to travel, and I'll explain more about that as we progress. And Jeremy, good to have you with us. Glad you can see the live show for a change. Of course, interact as much as possible. For those of you who might be new, if you have questions for me directly during the show, start your question with a few question marks so I know which ones are specifically targeted to me, as quite often we get some nice chat going in the group. All right, so let me start off with a rundown of the top kind of 7 markets, how they lined up today. I did open up a couple new trades today just for the next 10 days. Sold some options on silver as well as XLE, which is where we will start things off. We'll start things off with energy. Here is crude oil, which had just a bloodbath of a day. Absolutely brutal, and I think a lot of this has to do with that U.S. dollar, which I will take a peek at here shortly. But notice this massive red candle as we speak right now in the after hours. We're still down 8.13%, even though it's bounced a little bit. Crude oil falling to $99.61 a barrel, a huge drop. Pretty impressive one-day slide, and to me, it begs the question of, are we still in a macro uptrend? And of course, we could draw these trend lines from anywhere. I know everyone always gives me grief on, well, why'd you pick that point? I usually go for most points of contact. So in this context here, if we go to the low that we saw back, well, not the low, because that would put us at negative $41, and nobody would draw a trend line from negative price point. But the realistic low, which we saw back here right around the 20th of April in 2020, and draw it through the next low point, which is back here in December of 2021, we could contend that we're still in an uptrend. However, I know a lot of people who draw these lines differently. And let me move this over just a hair for everybody, and I'll get that dead low off the page. A lot of people look at this as being the most recent run for crude oil. And you can see here we do have the typical definition of an uptrend, which is you pick your starting point, which was this low on December 1st of 2021. December 2nd. You can see you have your second point of contact was on December 20th, and all of a sudden you've got a third, a fourth, and a fifth, so plenty of points of contact. What's interesting is over the past 3 weeks or so, we've approached that trend line and now broken it. So I guess the big question for everybody, and I'm not here to make that decision for you, is this uptrend in crude oil done? I personally still feel like it's going to continue to trend up, but boy, I've been wrong certainly over the past couple of weeks. So what are some of the metrics we can do to kind of map that out? Well, if you notice where the low was today, we saw a lot of congestion and kind of bouncing right around this area back in March of 2022. You also had it back in April, and you also had it back in June. And so a lot of issues with this current area, which is right around that century mark. So my guess is we'll probably have a little bit of a bounce here, which is why I sold some puts today on XLE. I'll explain more about that. I did that again for the 15th of July, collected about 1.2% for 9 days. So basically I was preying off of people's fear for energy, and I'll show you that trade in just a second. So that was your worst performer, down 8.12%, holding at 99.63 right now. My gut tells me you'll probably have a little bit of a relief rally, but I think that really makes the challenge is what's going to happen with the dollar index, and I'll get there soon. So we'll move on up. We start with one commodity which got battered today because of the U.S. dollar. Here is gold. So gold, this is real ugly. You notice this candle that formed today. Let me bring it over here. We kind of had this little box mapped out on the gold futures, and we had this kind of hanging man right near the bottom, which is actually relatively bullish. Well, today, not only did we just annihilate any sort of recent lows, but we've also closed right at the dead low, which is extremely negative for gold going forward. That said, where are we at currently? Well, you notice that line right around that 1765 mark. That's also a spot where it had been bouncing for the better part of a month back in November and December of 2021. So technically you're at a decent spot, but if there was any uptrend to be seen in gold, it's looking weaker and weaker, and I would argue we're probably in a shorter term downtrend here going off those peaks that happened back in March. So let's see, what did Chris say? Do you go from the low wick to last low candle body? That's a great question, and again, it's kind of like asking, how do you like your steak cooked, right? It's a matter of personal preference. When I have a wick like we did back in 2020 on crude oil that went all the way down to negative $42 a barrel or $40 a barrel, I'm omitting that. To me, that should never have happened anyway. So if I get an outlier wick, I'll just ignore it. But if it's a wick that looks like normal trading and it kind of, within the acceptable range, and that's a judgment call as well, I will start from the wick. But normally it's going to be from the real body. So for example, if you look at this downtrend here that we had on gold on the daily, right? Where would I start? I guess that's the downtrend here. Well, this wick that we had on the 8th of March, to me, that's not an outlier. That's just a standard wick. So I would put the magnet snap tool on, and I would start there. And then I'm going to go right away, and I'm going to want to go through that second point of contact. So you can see here, I'm going from that peak we saw on March 8th, and I'm going to go down through April 18th. And of course, I could extend that out, right, to see where it's going, but clearly we're down below that anyway. Some people like to torture it and will go to where it best fits. And if you go here, you'll notice now I've modified that. And what have I done? I've now gotten it to go from just below that peak, which I hit the opening price on the 9th of March, gone through the closing price on the 18th of April, and also now I've got a third point for confirmation. So personally, this is where I think the trend line should be for gold. Right? It's a little bit different on every chart. I know that's why technical analysis to me has so many flaws, because it's more of an artistic form. I like to go where I think most people are going to see that trend line. To me, this is where I would keep it for gold, right? So sorry, Chris, I know it sounds kind of ambiguous. Let's see, Chris says, I would go from that upper wick and the next upper wick, but also add another that lower wick's body. Well, remember, if we do that, I'll draw a separate trend line. I mean, we still have the same basic picture, right? But notice your trend line is going to be parallel and slightly out. So I would probably be a little bit of a more responsive to price changes, whereas yours, that top line, let me change that out there. Let me change the color here so the viewers at home can see. Let's make that line blue. Okay. So yeah, and it's not like it's a monster difference. It's just a slight difference there, and there is no wrong one. I'm certainly not calling you wrong, Chris. It's just, for me, I like it. I know with the red line here, I've got 3 points of contact. And you're right, I am omitting that wick that's on March 8th. And why would you want to omit it? It really traded there. It's good price. I just go by where I see more points of contact. That's more important to me. But again, that's personal preference. I guess there's no real right way or wrong way. It's what works best for you, and that's what's worked best for me. All right, so let's keep going. We'll probably take a long time to get through these top 7 markets, but that was gold down 2.08%. Really curious to see how the follow through is, because we are really right at the dead low. Here's a 15-minute chart of gold. This is pretty ugly. It didn't bounce at all. Like, it had an aggressive sell-off and then minuscule bounces, but just coming right back down. That's not good. That's like dropping a ball of lead, right? It's not going to have much of a bounce, and most likely going to continue on down. So the question I'll have to answer tomorrow is, is this area right now that it's at 71.65, is that strong enough to hold this and cause it to have a little bit of move up, or does this dollar keep pushing and push price down even further? That's the big question for tomorrow. We'll move on up. We still have one more, we'll call it commodity, to look at number 1, which is going to be Bitcoin. But we've got Dow futures here, which on the daily, really nothing to speak of. To me, this is a downtrend, fairly clear. We've got lower lows, lower highs. Today, nothing really to speak of, even though it was down 0.44% for Dow futures. Look at the last 4 days. It's really nothing overly exciting. S&P 500, honestly, putting in one hell of a day. This morning when I got in, I was like, oh, here we go. We're going to have another big down day, and we just pretty much rallied most of the session. You can see the S&P 500 finishing at 3833, up 0.17%, but check out this intraday chart. Thing of beauty right here. Hallelujah, hallelujah. Gorgeous chart from the intraday perspective. So for you day traders, this is the stuff that you just long for. You really had one huge short in the morning and a monster bull rally to close it all out. And closing right very near the session highs. Let's go to the Russell 2000. I'll work my way up to the top here, and then we'll get to the soup du jour, which is the dollar index. Russell 2000 posting a 0.65% gain. Same thing. You notice this really long bottoming tail. Some of you may be asking, is this a hammer formation? Is it a hanging man? In my opinion, it's neither, because it's not at the end of a big uptrend or a big downtrend. When I have a candle that looks like today's on the Russell, unless it's at the top or a bottom of something, it doesn't mean much to me. I mean, certainly if I took it by itself, it does mean you have bullish pressure, and there's probably a greater probability that you'll see more upside move tomorrow because the momentum has been up. So there you go, for what it's worth. The big gainer was technology. NASDAQ, not only is that a hammer formation, that's like Thor's mallet right there with the giant green body on top, to top that candle off. There you go, zoom in a little bit more. Huge day, finishing right near the dead highs, very bullish, 1.72%, closing at 11,811. So one heck of a day today for the NASDAQ. And finally, to top it all off, Bitcoin. You know, when you see Bitcoin up 6%, you're like, ooh, great. It doesn't look like much, right? We still are in this downward move, maybe a little bit of consolidation about to come into play, but still holding above that 18,000 mark. But all in all, crypto still not looking good. There's a lot of real negative news out there and things that I feel are going to continue to push cryptocurrencies down even further. There may even be, there are a couple of glimmers of hope with regard to the current situation, and time permitting, we'll talk more at length about that maybe later on this week, because there are some things happening which could help this bounce if the next shoe does not drop, right? The shoe stays on. What'd you say, OG? I went short Russell and long for the rally, but I got out too early for both. Did you make some money, though? Did you make money? That's the question. You know, if you got out too early, got in too late, that's fine. You know, you can go back and critique that as a trader and say, how could I have stayed in that longer? Could I have done better trade management? Could I change this? Could I change? You can fix all that. Bottom line is, if you lost money on it, then you really need to focus on what you did wrong. In this case, you did the things right. Now it's, hey, how do I manage that trade and turn those small winners into medium, or medium into large winners, and figure out how I can scale up from there. So good. It was a pretty clear-cut day. Awesome, OG. Good to hear. All right, so we've run through those. I want to, again, go back to this because I've mentioned this time and time again. I have been overtly bullish on the dollar. Anybody thinks I'm making that up, just talk to anybody who's a regular on this show. I've been bullish on the dollar. I still am bullish on the dollar, and I think it's going to continue to go higher. Again, the trend is your friend until the bend at the end. So let's move on to the Dixie. And there you have it. Last week we were saying, I thought that by the end of this week we might hit that 106 line. Notice this green line here, whatever color that is, that was the line that I've had drawn for a while. 106.50 was the line that we said that's the next target if we break above these highs. And not only do we get there, we ripped to it on the first real trading day of the week. So that's impressive. Why that line? Well, you got to scroll all the way back. Actually, I got to go to a weekly time frame to find that. And, it's really the origin of this last big move down, which happened in December of, believe it or not, 2002. We are literally 19 years and 6, 7, 8 months ago. 19 years ago when the dollar was this strong. That should right away be a noteworthy piece for anybody that's involved in financial markets. That is an unbelievably long amount of time. I'm going to go to a monthly here, and I apologize I keep moving these charts. It's the beauty of doing this all live. But that's how long we've been underwater. There you go. So this is the monthly. Kind of funny because back here when this market, the dollar index was peaking, that's actually when I signed my contract to go work in Italy, and it was awesome. I signed when it was 0.86 to the dollar, and when I left it was 0.56. So basically I got like 100% raise for doing nothing. Right now, we're seeing this dollar index accelerating. This move that we're seeing right now is pretty impressive. You notice there was a similar move back in 2014. From June of 2014, the dollar index was roughly, let's go to the low there, 81.57, and then within a period of just a month, we rallied all the way. Month. Take that back. That would be way too much. So from July 2014 to March of 2015, so call it 10 months, 9 or 10 months, all the way up to a high price of 100. It may not seem like a lot, but it's actually a huge amount. to go from 81 to 100. That's a 19-point increase in the dollar index. That means that anybody who's using US dollars across the world, mainly Europe, is going to have a much better buy rate. You can buy more. You can travel more. So really, this is ultimately not going to help the U.S. Let's make that clear. A strong dollar is not going to help the U.S. What it means is anybody from Europe or London or Moscow or Singapore or Japan or China that comes to America as a tourist can get a lot less. They can't buy as much. So now they're going to be constrained on what they can purchase. Now flip that around. If you decided to go to, let's say, Europe right now, you're getting a great deal. You can buy a lot more. Your dollar buys so much more than it did just a month ago or 2 months ago or 6 months ago. Same thing if you're going to the UK. Same thing if you're going to Japan. Unbelievable discounts out there. I'll show you some Forex charts here in a second. But when I look at this picture, man, it actually tells me from a technical perspective on this monthly that we should stall here. We really should have a little bit of a bounce, but I think we've kind of, I don't know, the last couple weeks have been hesitating there anyway. So if we don't get a little pullback here, we break through this, and then you got to ask yourself, well, what's the next big stopping point? Well, here's your monthly. I don't really see anything here on the monthly that would call it into play. I'd have to probably shrink this down into, let's say, a daily time frame. Let's see. Let me put I got to go all the way back to 2002, and I will put this on a weekly to start, just to see if we can find any gaps all the way back to 2002. I'm sorry, it's going to ruin some people's brains as I zoom in and out repeatedly trying to find the next level. But it's like, well, where's it going to go, right? If it does break this green line, then you can see that there's an upper range, which I will take this blue line and move it there now. So this blue line, I would argue that's kind of your upper range, maybe about 108.73. Right, that's this consolidation here. Put a little yellow box for fun around that bad boy, just so we can have that one all mapped out. I mean, that's where we're in right now. After that breaks, there's really only one level on the weekly that I think is significant. Other than that, it's pretty much smooth sailing, and that's right here, right around 113.80. Again, if we get to 113.80, can you guys guess what's going to happen to the U.S. equity markets? Today's price action, at least for the commodities space, was reflecting this dollar strength, right? And now that the Fed is raising rates, we've talked about the carry trade. It's going to continue here, and more people are going to be buying U.S. dollars. I think I see this getting much higher than 106, 107, 108. I think it's going to probably get to that 113 level. Does the dollar usually negatively correlate to the VIX? Yes. Actually, no. I take that back. How consistent does it do it or have it backwards? So remember this, Eric. The VIX is the opposite of the S&P 500, right? So as the S&P 500 had a big rally today, what did the VIX do? Sold off. VIX represents fear in the marketplace. So if people are really fearful about the market tanking, they'll buy a bunch of put options and the VIX will surge. So today, like I said, you had a market rally. People aren't so worried about buying puts. There's less put pressure and more call buying. Therefore, the VIX actually declined today as the S&P rallied. So it's opposite. Historically, the dollar is going to operate the opposite from the markets, right? There's an inverse relationship between the dollar and equity markets. When you have a really strong dollar, generally the equity markets start to tank, right? Chris says, dollar is greater than equities. Yeah, 100%. Dollar is right now, you look at the equity markets and you're like, you go, okay, I got to look at the S&P, the NASDAQ, the Russell, the Dow, and all the different subcomponents and all these. That's the ocean, right? And most people say, well, the tide is the S&P. Well, if you're doing that kind of analogy, then the dollar is the moon. And we all know that twice a day there's a high tide and a low tide, and that's because of lunar pull on Earth, right? To me, that's what the dollar is. The dollar is the piece that says we don't care if you're the ocean or not. We're going to make that tide rise and fall based off the pull from that moon. To me, that's the dollar index. And if this dollar index keeps surging, this is going to have a significant negative impact on the equity markets. I mean, just look at, if you go back to when this dollar index bottomed here, right? And this is on a weekly, so we've got some time. You can see we actually formed kind of a, let me get that out of there. I got some trend line, old trend lines on here when I was doing inverse head and shoulder, which actually worked out. You look at these low levels here, right around 90 on the dollar index. That was back in January of 2021, and double bottomed in May of 2021. If we go to the S&P 500, okay, our pivot points aren't quite there. But remember, when a rising dollar is going to take some time to impact people's bottom line. the more that we see the dollar rise, again, the less goods and services that we are going to be selling. Not only that, but think of somebody like Apple. Apple does massive global business. So if Apple sells $1 million worth of iPhones in Europe and then tries to bring that money back in, when they convert it back to dollars, they're getting less dollars for it. So it actually starts to hurt international companies in that way. So like I say, it's a fairly complex chess game going on right there, but this dollar index to me is very key. Certainly, I've been keeping an eye on the Dixie, and I'm still very bullish. I don't see a reason right now, unless inflation gets totally under control and the Fed stops selling bonds and actually starts buying them again. I really don't see that. I really don't see it. Pundits are looking for a pre-COVID high. With the dollar, Chris, or with the equities? The world is... Did you say flat or fiat? Merlin and Forex majors last week. I saw that a lot of the pairs were at lows that went back to 2020. Yeah. Oh, yeah. Absolutely, Doug. But don't let that fool you. Let's continue on that vein, all right? So, again, the topic was, how to trade that soaring U.S. dollar. And I kind of did it as a little bit of a clickbait because everybody wants to know how to trade something and make a ton of money. But bottom line is you have to figure out, okay, how does X impact Y? And then all the other variables that go along with it. So one of those historical relationships is a strong dollar usually leads to a weaker equity markets, right? So as that equity market starts to decline and dollar rallies, that's a normal correlation. The other one that is pretty normal, and if you expect the dollar to continue, then this might be a play as well, is commodities. So since the US dollar is a reserve currency of the world, commodities are usually priced in US dollars. So as the dollar continues to rally, anybody who's buying commodities that's international is now paying more and more and more money for those goods and services, right? So I'm making the example up here. So let's see, maybe I can draw this one. Whew. Great. You got my art skills coming right up on stage number 2. Let me set some screens up here for everybody just so I can get this rolling. And we'll add that one in. I'm going to change my layout. Okay. All right, here we go. So just so you guys have an idea, and I'm sure many of you know this, a lesson to look at it. So let's say, let me get my mouse out of the way. Apologize for that. All right, so I've got $1 equals, let's say $1. Let's say that equals, I don't know, I'll make this up, 1.5 euros. All right, just make that up. So $1 equals 1.5. Actually, let's start even more basic. Right, $1 equals €1. If that's the same, then if the price of the goods and services in our respective countries are the same, then nobody's gaining, nobody's losing. But if we look at that and go forward, and let's say the dollar now buys me more euros, right? So now $1 equals, let's say, 1.5 euros. What that means is I can buy more euros. So if the same goods and services, let's say a car cost me $1,000 and it cost me 1,000 euros, well, now all of a sudden I can buy more cars. I can buy more TVs, I can buy more cameras, I can buy more trips, I can buy more lift tickets and drinks and beers and alcohol and food. I can buy 50% more if that currency moves like this. And this is what we're seeing with the entire dollar index. Now, if that $1 declines and now all of a sudden I can only buy, 0.5 euros, well, that means is that euro is getting stronger. So euro is getting stronger and the dollar's buying less. So who's winning there? The winner is not the euro. The winner is not the dollar. It's the euro. Because the euro can now go back and buy more dollars and more goods and services. So to me, it's pretty important to pay attention to how these relationships work. Because now I'm looking at I'm going to be going to Oktoberfest in October. September and October. I might have actually did that example backwards because it's been a long day. I'll explain it more. If I'm going to Oktoberfest and the euro is at parity, that's a great thing because here is your euro. As you can see right now, the euro is declining in value. So this is how many euros it would take to buy $1. And back in December of 2020, it would have taken roughly 1.23 euros. That's how many dollars you would get for €1. Now, you're only getting $1.02. So anybody who came to Europe back in January of 2021, they bought a lot more. They had way more money to spend. Now it's almost parity. So I'm looking at my trip going, this is great for me because the euro is falling aggressively. I mean, we have seen, let's do the percentage decline here, just from that January high of 2021 to where we are right now, a roughly 16% drop in the value of the euro. Crikey. I mean, that's, if you live in the country, it's not that big of a deal. But if I'm traveling, like my trip to Europe, this is going to be a huge money saver for me. My trip basically just got 16% cheaper. And I'm assuming, my bet is that we're going to see it at parity real soon. I think many of you would agree. If you look at this price chart here, we haven't been this low on the euro since 2016, and we're now below that level. So where does it mean we're headed? In my mind, we are going to parity. We will be here at 1 probably in the next few weeks if this trend continues with the US dollar. Again, the more that euro USD falls, the better, the stronger that makes the US dollar. And if you're traveling internationally, you're buying goods overseas, this is great for you. Let's see. Are they actually cutting back on printing dollars yet? That should make it also rise. Yes. So you have several factors here. So, the topic is obviously how to trade that rising dollar. Remember, there's multiple things. I'll talk to it from the bullish perspective, and then let's talk to it for the bearish perspective. So let's start bullish. The bullish argument for the US dollar is pretty simple. Interest rates are rising, right? We're seeing those rates get higher and higher and higher. The Federal Reserve is saying, hey, right now there's an 83% probability we're going to see a 70 basis point increase at the July meeting. There's also a 16% chance we're going to get 50 basis points. Either way, that means that the US dollar is earning more yield. So for those who hold US dollars, you're getting paid to hold those dollars. The more that rises, the more incentive there is for other countries to hold US dollars. So for example, if I hold the Japanese yen right now, if I bought Japanese yen, I'm losing 0.1%, right? That's their Fed funds rate is negative 0.1. So I'm losing 0.1. So what I can do is I could actually take my Japanese yen, which is negative 0.1, sell that, and buy the US dollar, which is paying me 1.75. So now, instead of losing 0.1%, I'm now making 1.85% if I'm a Japanese citizen. You're incentivizing them to buy the US dollars because we're raising rates. And we're trapped, right? Because the US doesn't want the dollar to rise this much. It makes us paying back our debt is far more expensive. A weak dollar is great for paying back debt and for growth of the economy. But in order to fight inflation, they have to raise rates and choke out the economy. But now you got a double whammy because foreign countries that are paying nothing for their currency are now saying, hey, why don't you go buy the dollar? Make yourself 1.75 for holding that US dollar and whatever your other currency is, you can figure out that calculation. So you're incentivizing it. That's the euro dollar shortage. I've been to Oktoberfest a few times. I was born in Munich, so for me it's, yes, I'm going back home to my roots, drink some beer. Should be fun. But that's one of the big bullish arguments. And to go back to Skilled Stocksman's question is, well, wait a minute, are they actually cutting back? The answer is yes. Remember, they're selling those bonds. So the Fed purchased all these bonds for the better part of 10 years, 13 years. They've been buying since 2009. They're the largest bondholder in the world of U.S. debt. And they printed that money out of thin air, literally a ledger entry and created it. That added to money supply, which of course was over $15 trillion in just 2 years. Duh, I wonder why we have inflation. Tough to see. Now what you have is they need to sell those bonds to the open market or to other governments, take that money they got from those bonds and remove it from circulation, which in theory should slow down the circulation of money supply and fight inflation. But what does that do to the dollar? I just mentioned you have foreign countries that want to buy the US dollar because they get more yield. You earn more by holding US dollars. Great, let's do it. So they're coming to buy our dollars, and now all of a sudden there's less of them. When you have supply decreasing and demand increasing, it's pretty clear where price is going to go. It goes up, and that's clearly what you're seeing on this dollar index chart here. I don't see that ending. Remember, for 3 months, the Fed will be selling their bond portfolio. I believe it's the tune of $45 billion a month that they're going to be selling of treasuries and mortgage-backed securities. After the end of 3 months, they will start doubling that and go to $90 billion a month that they'll be selling. Well, what's that going to do to the dollar? It's going to further accelerate it. So you're telling me you're removing money twice as fast in 2 months. They'll start moving money twice as fast, and they're going to raise rates again. Now, just for those of you who might be playing along at home, here is the forecast for the July 27th meeting. You have a 16.8% chance of a 50 basis point increase and an 83% chance of a 75 basis. Now, I personally think that you're going to see this drop. I think you're going to see this drop from 75%. Most likely, I think they're going to see a 50. It really revolves around this number coming out Friday. This is a big week, guys. We got 4 unemployment announcements for the U.S. You have JOLTS job openings this week, ADP non-farm employment change. You have non-farm employment change as well as the unemployment number. If those start to tick up and start to show that they're increasing, I think you'll actually see the market panic a little bit, because that could start putting us in a stagflation environment, which is like, well, how do you get out of that, right? How do you get out of a stagflation? That's a really tricky one. It's easier to get out of an inflationary environment or a deflationary environment, heck, even a depression. But a stagflation economy is very difficult to get out of, and I don't know how they're going to do it. Anyway, not an economist. But here is the forecast for the rest of the year. Remember, right now, we are currently at 1.5 to 1.75. Let's just take a peek at the end of the year. All right, here's December 14th meeting probability. Remember, we're currently at, let's call it 1.75. Well, the average target right now is at 3.50, which means double the rate increase from right here. From right now, doubling the rates. And you're like, wait a minute, Merlin. If you're telling me that this dollar has been rallying because the Fed has been raising rates and making the dollar more attractive, yes, that's exactly what I'm saying. And now the rates are going to double from here. That's the forecast. So what scares me is if that does happen and they keep selling their bonds, I mean, here's your monthly on the Dixie. This 119 level doesn't start to look so far away. I mean, hell, I don't think this is going to be like a by the end of the year kind of thing, but by next year, if we don't get inflation under control and they keep selling their bonds and raising rates, yeah, 120 is absolutely on the table. And we'll scroll out here historically, because I know some of you are going to say, what's the all-time high? Look, this is 1985, but this is also when we had 16% inflation, right? 164. I think. Let me see the all-time high here. 164.72 was the all-time high there. So what else is the U.S. dollar correlated to? There's a really good resource for you. So you could talk about a lot of different things. But if you go to MRCI, it's more research, MRCI.com. I'll post a link here in just a second. I don't know why this is not loading up. So more research has a really cool correlation table that you might want to use. So if you go to MRCI.com, scroll down, and it says free futures research. And there should be one that says market correlations. Intermarket correlations, right? I'll post a link here in just a second for you guys, so don't worry. Okay, or see. Let me know, for those of you that get this, just let me know that this works. It should work for you. Hey, Big Ab, good to see you, my friend. So this table's great. If you want to know what the dollar index, here's your DX, which is the dollar index, right? You can just look at what it's correlated to. So you can see right here, it's negative 85% correlation to the Dow futures. And here's the S&P. Here's the NASDAQ. It's a negative 88%. What is it positively correlated to? Well, you can see here you've got, in this case, gold, which is interesting. That shouldn't be. You can see the different metals here are typically inverse. You got it. It says there's an 87% correlation right now with crude oil. Now, I think crude oil is a little bit of an outlier. You have heating oil and gasoline. Yeah, I think USL, I'm not sure on HO. But you can see the percentage correlations. And what's nice about this is that was 30 days, but you can go 60, 90, 120, 180 to see what the long-term correlations are. And what I've seen quite frequently is big changes. Like lately, there's been huge swings in those two. So they kind of highlight the extreme tightly correlated and the extreme inverse correlation with the positive and negative. So hopefully that helped you out there. Who said in that one? Margaret, there you go. Let's see. Do you see the Dixie hitting the 115 mark? I'll tell you now, that's a really tough question. I mean, again, I am not giving financial advice, but if we don't get inflation under control, absolutely. I don't even think it's a question. If inflation stays at 8, 9%, maybe gets to 10 or 11, then the dollar's hitting easily 115. I know it seems crazy, but I would say easily. The trend is so aggressive in that pattern. And tell me a reason, and I'm asking. I mean, I'm not being condescending, but like, just tell me a reason why the dollar should tank. The Fed can't cut rates right now unless they have proof that inflation's under control. And I've made this argument the other day. I said, if we look at some of the commodity prices, this may actually be them getting inflation under control. Here is some, let's just look real quick at some of the bigger commodities, right? Here's lumber. I know we did this the other day, so I apologize if I'm repeating, but I do think it's really critical. I mean, you look at the peak of lumber back in March, we were at 1,300. Well, now we're at 640. That's 50% lower. Cotton, an absolute crime scene, right? We were up at over 156. Now we're at 93. You look at corn, right? Corn was at 820 about a month and a half ago, about 3 months ago, and now we are at 592. I mean, that is a significant haircut. Natural gas getting slaughtered. You see wheat down here as well. I mean, I had this little line drawn. You have wheat is down 37% in a couple of months. This is obviously going to impact the inflation numbers. Here's soybean futures just getting slaughtered, almost lock limit down today. So, even things like metals, right? They haven't, some of them, platinum has been getting slaughtered. Silver, unfortunately, is just getting beat up, and that's hurting me. You've got copper as well. So I see a lot of these really impacting the dollar. So, no, I'm not trying to be evasive. It's just a really hard thing to answer. If inflation stays out of control, absolutely. But it looks like our next inflation number is going to have a significant drop. I mean, how does it not? When you look at these declines in commodities, it's got to have an impact on the inflation numbers. Now, we'll have to wait and see. I think the big number for me is this Friday. That's the unemployment number. Like I say, if that unemployment number starts to tick up, that really puts the Fed in a bad spot. Because how do you fight unemployment? Well, you want to cut rates and stimulate growth. But they can't stimulate growth because inflation's out of control. So it's walking this really tricky line. I would not want to be Jerome Powell at this moment in time. I do not trade the Dixie, Lori. I don't. I just look at it. I use it as a reference for most of my trades. Remember, the Dixie is very biased. So the Dixie is made up of 6 different currencies, but like 50% of it is the euro. So it's literally going to be the direct opposite of the euro. It has things like, Japanese yen, British pound. It has like the Swedish krona in there. I'm like, Swedish krona? When did that become an economic powerhouse? No offense to my Swedish friends. Smiskame. For those that don't know that one, that's a long story there. That's a fun one. So let me just real quickly run through some of the other currencies because, hey, I'm telling you, the airfare might be really expensive because of gas prices, but your expenses when you go to these countries could be very cheap. Our neighbors to the north. Right, this is the U.S. dollar against the Canadian dollar, which means you're seeing more and more strength in the dollar. It's not as clean as some of the other price charts. Right, it's still looking pretty strong. We are right now at this overhead supply, and last time we hit this level, this was just a few weeks ago. We were saying, well, we'll probably have a little bit of a sell-off from there, and we did. And now all of a sudden, in one day, it's ripped right back up to it. So it feels like the momentum here for the U.S. dollar against the Canadian very strong. Right now, it's at 130. That could get much higher. What else do we have? Swiss franc. I'm probably not going to Switzerland. It's not really doing that great against the Swiss franc. Here's your Japanese yen. Like if you want to go to Japan, man, this is the time. This is a great time to go because of how much you have gained in the purchasing power of your U.S. dollar. Yes, the airfare is cheap. Use your miles. But I mean, if you go back to the low point here, let's just go all the way back to the low point, which is right around January 5th. To where we are today, bear with me as I get these charts lined up, you're looking at a 32% increase in the purchasing power of your U.S. dollar. That buys a lot of ramen or Kirin beers over in Japan. I mean, that's a significant increase. And I think a lot of people when they travel don't think about this. I've told you guys this before, but when I was in college, I had a finance professor, Jamal Munshi, who had probably one of the more profound impacts on me with regards to my, understanding of international money. And Jamal was this really quiet Indian guy, really awkward, but just brilliant. One of those guys when he starts going, you go, wow, this guy, you're a savant genius, right? And so we asked him, he said, where do you go every summer? You got the summers off. And he says, I says, easy. I'll do it with this. He had a really heavy accent, so I apologize, Jamal, if I'm butchering your accent, but he's like, this is very easy. Every summer I go where my dollar buys me the most. I was like, what do you mean your dollar buys you the most? I don't know what you're talking about. Just look at the exchange rates. I'm like, okay. And I found all kinds of little tables and sites you can find that you can track. This is before I was really into trading currencies. I found a cool website where you could go and say, show me where the US dollar has increased the most in purchasing power over the last year or 2 years or 10 years. And it was always Thailand. So that's one of the reasons I went to Thailand so many times. It was awesome. And, we could probably do a show where it's like how to find out the best place to travel for an American, right? We'd do a show specifically on that, and I could walk through the top different countries, and it would be kind of fun. Jamal was a terrible dresser. He was no fashion king, that's for sure. It's funny because he actually lived right down the street from me in this one of the tiniest little places. He was really, really cool. Shabu Shabu, yep. I don't know if he's here, but we got my buddy Cal Shabu, Wayne. If you guys are in Costa Mesa, it's funny. My girlfriend and I, we love Shabu, so we try to go try all the different places. And it's funny because she'll get hooked on one place, I might like one, and we'll keep. I want to keep trying all of them. And there's so many places here in Orange County, and we finally found this one place, and it's like, dude, the customer service is great. The sauces are far better than any other place you could possibly imagine. It's so good. Anyway, I'm a Shabu addict, and my waistline is paying for it, but it's still pretty good. So let's see. Let's look at another couple currencies here, because obviously USD JPY. I mean, heck, and I mentioned this as traveling, right? If it's way more than that. What if you wanted to go buy a house? You're looking at the U.S. equity markets. You're like, hell, you know what? These markets are topped out from housing. Interest rates are rising. I'm going to sell my house here and maybe go buy some property internationally. Now you could buy something at a much more discounted price simply because of the currency. So we could do that as well. Let's see, Australian dollar USD. So what you're seeing here is the value of Australian dollar declining against the US dollar. Again, the US dollar is super strong. You're seeing a significant decline in Australia. So Australia becomes cheaper. You got the British pound. I mean, British pound was up over 142. Now it's at 119. That is a significant discount, and if you ever go out in the UK, you realize that those lads, they like to drink. You end up spending your salary on just going to the local pubs and having lunch beers, down 16% in a year. That buys you a lot more beer over there. And we talked about the euro. I mean, euro just massive declines. And let's not talk about the ruble because that's just crazy. I mean, I'm pretty sure not too many of you are going to be going over to Russia anytime soon. So, to me, I look at the how to trade the soaring dollar. I think there's a lot of opportunities. Bali might be a good one too. If I go though, you need to show me around because I actually really, I love the Bali environment, and especially the clothes and the culture. And I haven't been to Bali specifically, but the one thing that concerns me is I don't want an overly heavily religious area. I'm more free. Do what you want, but don't persecute me for just being a human being. Selling here and going expat, don't encourage me, Merlin. Doug, it's encouraging myself. It's tough. I love traveling. I think that, I think I've told you guys this many times. I was asked by a radio station once. It said, if you can make one rule, what would it, if as you were president of the United States, you can make one rule, what would it be? It was actually this Spanish radio station. They were awesome. But I said, listen, if I was president of the United States, I would make it mandatory for every child under the age of 18. You have to spend 1 year outside of our borders. If you don't want to challenge yourself, go to the UK, go to Australia where they speak English. If you want to challenge yourself, hell, let's go to Beijing. Let's go to Indonesia, and you have to learn that native languages, right? But more importantly, what happens is the ignorance level drops. You see how other people live. You have an appreciation for where you live, and I think it would make the world a better place. Hell, I think even other countries would be like, this is a good idea. Right? I'm sure Italians would be like, yes, let's let our people be cultured. And we probably have a lot less violence, ignorance, racism, stereotypes, etc. Around the world. That would be what I would do. And I, if I ever have children, I will encourage them to travel as much as possible. All right. Sorry. One rant. Let's see. Did I have any questions that came through? I want to real quickly get to some of these because I'm out of time here and I just can't give Big Eb the status. If Big Eb shows up late, I'm not doing an hour show. It's all on Big Eb. Okay. Cool. Then in Bali it is. I will go to Bali. And not that I have anything wrong with Muslim. I just don't like when culture is pushed on me. I am one of those people like I'd love for people to believe what you want to believe, live your life the way you want to believe, but as soon as you start persecuting and punishing people for their beliefs, I think that that's wrong. All right. Let's see. I'll do this one very quick. Skilled Stocksman, since you're here, I'll answer this question for you. It says, for futures equity trading, do you use the gaps on the regular trading hours .D charts as much as the Globex chart for gap fills or other trading strategies? Tons of gaps on the ES.D. Yes. Oh, I know Big Eb is here. He was late. So on TradeStation, you can type in ES.D, and that'll basically what it does, it just shows you the regular trading hours of futures, so you get the gaps. For me, the equivalent of that is just look at SPY. So I typically will use SPY or the ETFs to get a sense of what those gaps are. I don't use .D charts anymore, and honestly, I don't even use TradeStation anymore. So other platforms may have the .D, but I don't. I like to look. I'll look instantly at the Globex, show me what happened, right? Show me that after hours trading, and then I'll usually look at the ETFs and see where they line up in relationship to those futures charts. That was an easy one, Skilled Stocksman. And last one here, before I wrap things up. This is from Todd. He says, what's your preferred method of cold storage? As you guys know, I'm having some struggles with crypto right now simply because the exchanges I've been earning interest on has been shutting down. A lot of these have been freezing, so I pulled some more off over the weekend, and some of it's frozen, so I've got about 60,000 right now that's frozen and locked up, but I can't do anything with. Cold storage will fix that. So what's my preferred method of cold storage? A nano ledger, right? The nano ledger is probably the easiest thing to use. You could use something like a paper wallet. Those are good as well, but nanos are just very easy. If you are doing anything with a paper wallet, just be very careful because of, I guess, privacy concerns on when you print that wallet and how you created that address. Daniel, you're funny. I love the Dutch, by the way. Dankjewel. I love the Dutch. Oh my God, Amsterdam's one of my favorite places. Of course, I have some really good friends there, so that makes it easy. So the two things I cannot stand: people who are intolerant of other people and the Dutch. See, for me, in all my travels, like the worst I was ever treated was in Paris. Like, I have a disdain. I actually studied French in school. I did 3 years of French, and I got there and was all excited to practice, and man, I've never been more mistreated in any country. It just blew my mind. So yes, a Nano Ledger is the one I use, but I use the X. I have the Nano Ledger S, but they don't hold much. You only get 2 or 3 cryptos on these. The Nano Ledger X, which is a little more expensive, will get you about 100 different cryptos. My parting piece of caution here would be make sure that you only buy your Nano from ledger.com. Go to the company. Do not buy it on Amazon. Do not buy it on eBay. Don't buy it from somebody else because they may have your seed phrase already and can steal everything from you. So especially things like Amazon. People can buy them, cut them open, turn that thing on, get the seed phrase, repackage it, reseal it, and give it back to you. And you're like, oh, I have a brand new one. No, someone's already got it. Someone already has that seed phrase. I don't trust anything coming from Amazon products as being official. Let's see. What was Tom? Canadian cost 0.75 when I was a kid near the Canadian border. Yep. 35 years later, it's 0.76. Well, it's not that you should get excited over Forex. So you know why? Because you have these huge swings. And if you practice market timing, the numbers elude me, but I remember when I first moved to Italy, I looked at an apartment and it was 250,000 euros. And I was like, ooh, maybe I'll just buy an apartment because I thought I'd be there for a couple years. I'm like, why not? Just buy a piece of property. So I thought 250,000 euros, but I passed. At the time, it was 0.86 euros to the dollar. So I could have bought it for roughly $220,000, right? It would have been cheap. And then by the time I left, it was 1.56, and that appreciation of that house went from like 250,000 to 500,000. Plus, I'm now at 1.57 conversion, which means that's a $750,000 house that I would have paid $220,000 for, based off of currency. So to me, currency makes a big difference when we look at things like market timing. What's the difference in dollar euro versus future chart of the? They're pretty same. One's just traded on a centralized futures exchange. The euro USD. So if you look here, these are coming from a specific exchange. This is coming from IDC is where this quote's coming from. Here is USD CAD. This is coming from FXCM. So these are coming from different brokers, whereas if you look at the currency futures, those are coming from the respective exchanges that those are traded on. So the numbers I'm looking at here for currencies are fragmented, non-centralized markets. It's actually better to look at the futures. There you go. What else do I have? And Tom says, I've said the Parisians stand out. And it's tough because they're very proud. They're so proud of what they do. That's their issue. They're overly proud and they don't want people ruining their culture or anything like that, which I respect. But boy, the food in Paris, mamma mia, so good. Food, and I love the architecture as well. Yeah, so Doug says, I think the Nano S is being discontinued. There's an S Plus now, which gets you more, but just spend the money, get the Nano Ledger X. It's the way to go. You can also use, there's one called the Trezor. That's also a very popular one, but I've just used the Ledger, and I've been very happy with it. Tom says, Forex stocks futures are directional. I prefer non-directional. There you go. You found what works for you. Tom has become an options junkie. Who knows? Pretty soon you'll probably be teaching classes at Online Trading Academy. I love it. All right, let me real quick get to the economic. So there's really nothing going on for earnings this week. It's totally boring, but there are big economic announcements. Here are some of them. This is for tomorrow, the 6th of July. Down near the bottom are the big ones, which is going to be JOLTS job openings. That's our first look at jobs for the week. Again, there's announcements Wednesday, Thursday, and Friday. You also have ISM Services PMI for the U.S. And then the one that a lot of people have been raising their chatter on is the FOMC meeting minutes. A lot of people are really speculating on what do the different members of the FOMC, the voting members, what are they thinking going forward? Have they had an about face? Are we now thinking maybe it's not going to be 75 and drop to 50? Or is this still an oh crap kind of moment and it's going to be a full point, right? So you get some clarity from those FOMC meeting minutes. But look, my bitter cynic in me says that's all scripted anyway. I don't believe that the FOMC meeting minutes are literally some stenographer sitting there typing out the meeting minutes. I think it's like, okay, what report do we want to issue to people, and what do we want to make? What do we want to say? How should we craft our dialogue for them? But anyway, it's a anticipated announcement that goes out there. All right, let's see. I think that's it. Yeah, there's nothing else. Again, if you are trading the euro, you do have retail sales numbers come out. That's expected to make an about face and look positive, but that's pretty much it for tomorrow. All right, Nick. I'll do this last one. I'd like to hear your projections on the crypto market over the next year. I think you have probably another 4 months of down move in crypto. I think you have to have a shakeout from all this lending protocol. I think you still have stablecoin issues with algorithmic stablecoins, so I think you have to let that filter out. I think you have some defaults are going to happen from different brokers, hopefully none where I have my money. Then we'll get some regulation, and I think that will be a really good roadmap for what will happen in crypto going forward. I still, based off my technical projections, Bitcoin 10,000, which is insane, and I don't want it to get there, but that's just simply my chart pattern says 10,000. So I really think you're going to get more downside movement. I am long-term bullish, but not in the next year. I think in the next year, you're going to have a lot of volatility. I think you'll see a continued slow drift down. And then near the end of the year, maybe some stabilization. And then in a year and a half to 2 years, we'll start to see the next bull run. So don't expect any major moves for the next year, in my opinion. And that's just an opinion, right? Nick, I could be completely wrong. And I'll be honest, I don't particularly care because with crypto, I am an absolute buy and hold person. Again, 5 to 10 years of my time horizon, I'm not concerned at all about this most recent drop. It actually looks to me like I'll have the opportunity to buy some things that I want to in greater quantity at these levels, or maybe the levels in another few months. All right, well, thanks, Doug. I had fun on the show tonight, too. Again, hope you all have all your fingers intact and everything was going great for your 4th of July celebrations. I did a wonderful neighborhood party down here, which is always a great time. I live in a very, very good neighborhood. Tons of fun. So I hope you guys did safe and sane as well. If you have comments, questions, you see the email on the screen is TraderMerlin@gmail.com, but put your comments down below the YouTube video. I think that helps out and maybe get some engagement and conversation there. So if you guys have stuff there, please ask there. Hopefully we get more topics for this week. Again, those who send in questions, thank you very much. That usually steers the show. So send your questions on in either to my email or to the YouTube page, and I'll get that all set up for the show this week. I don't think I have no guest schedule this week. I'm really trying to get Larry on. Larry's been making some more acquisitions, adjustments to his portfolio, and one of them I'm excited about, but he doesn't want to do it. So we'll get Larry on here sometime soon to talk about his portfolio and hopefully get your questions so I can come up with topics for you guys because I've done a lot of them. I just look back, I think I've done like 370 shows in just the last year and a half to 2 years. So pretty good. Anyway, thanks everybody. Hope you have a great remainder of your day. Be careful out there. I will see you all on our Wednesday show. Take care.